Hello, everyone, and welcome to the webinar. I'm Nick Zulovich, part of the team at Cherokee Media Group and Subprime Auto Finance News. Thankful you have joined us for our session titled Digital Innovation for Collateral Protection, Trust but Verify, featuring Scott Myers and Mike Batchelor of Allied Solutions. Before we get into our featured presentation, just a couple of points to mention. We are recording the webinar, and keep watch of your inbox for a message containing a link to it so you can watch it again and share it with your colleagues. And if you have any questions following the presentation, just use the chat function here on the Zoom platform, and we'll get to those questions after the great presentation upcoming here from Scott and Mike. So that's more than enough from me. Let's get right to our featured presentation, Digital Innovation for Collateral Protection, Trust but Verify. Scott Myers, Mike Batchelor, take it away, gentlemen.
All right.
Thanks,
Well,
Nick.
thank you, everybody. Oh, yeah, thanks, Nick. No problem. And thank you all for showing up. Again, this is something that Mike and I enjoy doing quite a bit. We've paired together a few times on this, so this should be a pretty good time. But we do want to talk to you today a little bit about, again, digital innovation for collateral protection from a technology perspective, but also from a risk management perspective. And just kind of to start off with, let's get to kind of what we've seen from an industry perspective over the last couple of years as we've come out of COVID and moved into kind of a new normal over the past 3 years since pretty much 2022. Some of the things that we've seen in the industry over that period of time that probably everybody on the phone and everybody that will listen to this has seen as well. Is just the cost of insurance has increased, whether that be premiums, which are up 22%, whether that be the cost to own a vehicle, whether that be the cost to repair a vehicle. It just looks more and more like everything is going up. Some of the numbers that you see on this slide should not be surprising if you've been paying attention, or if they are, it is kind of a moment to go, oh my, I didn't know that a lot of these things are actually tied together. So if you think about it, it becomes pretty clear that if it costs more to repair a car, if cars themselves, if you look at here, the MSRP of a new vehicle in 2024 is up 8% over 2022. Everything costs more, so insurance is going to cost more. And what does that mean for the individual consumer, member of a credit union, et cetera? What does that mean for them when they go to buy insurance? And what does that mean for the overall marketplace, and the industry as a whole? And basically what it means is, there's less people with insurance. Insurance costs more. And if you look at the economy that we find ourselves in today, and kind of the last point on this slide over on the right, is we are starting to see the repossession volume, the delinquency volume in the auto market increase. It had been basically flatlined throughout COVID, throughout most of 2022. And then last year in 23, we started to see that increase in delinquencies, the increase in repossession volume, et cetera. And probably one of the only positive outcomes of an increase in repossession volume was that we might see some impact on the used car market, which we did. Used car values have kind of stabilized a little bit, but they are still up from where they were in 21 and 22. So we are seeing that again, the insurance carriers, are still put in a position where they are insuring vehicles that cost more to fix. And that we're in an economy as well where we're seeing fewer and fewer new car originations. So vehicle values, well, we expect them to come down, still haven't really come down at this point. So where we're at kind of as a whole, if you look at it from a high level, is that everything just costs more. Again, when you look at the price of insurance and whether or not people even have insurance, it starts to become a little bit something where you do scratch your head and ask that question. if things cost more, how many people have insurance. So what we've seen, from a lot of the reporting that we take a look at, is that the number of uninsured vehicles or uninsured drivers out there is up, and the number one reason why somebody does not have insurance is that they cannot afford it. Or the second reason, which is a little bit further behind by some margin, not being able to afford insurance, is to not have insurance because the vehicle is inoperable. But why is the vehicle inoperable? Well, it costs so much to repair the car at this point that you're just adding another cost onto the ownership of a vehicle. So we see, again, right now, about 1 in 8 drivers on the road right now are uninsured. And if you want to pause for a second and think about that, if you're on the highway tomorrow, every 8 vehicles you see, one of those cars is uninsured. And if you get in an accident with that vehicle, it's far more costly for your insurance carrier. That's a hidden cost in the insurance world, is that, yeah, your insurance will pay for it, but now your insurance will cost more because they have to pay the financial penalty of somebody else not having insurance. And the likelihood that they'll recoup that money from the uninsured driver is pretty low. So that is one of the great hidden costs of insurance, is paying for everybody that has insurance is paying for those people that do not have insurance. And we see rates on this. It varies greatly by state. I think New Jersey is about 3.5% to 4% uninsured. In the state of Mississippi, no offense, is 29 or 30% of the vehicles on the road are uninsured. So it is variable by state, but that national average still sits around 12.5%. So again, and it's on the rise. If you look at from the reporting from 22 to 23, we're seeing an increase year over year. And again, it's not good news, and it is something, as as a lending institution out there, how do you protect yourself when your collateral is out there mixed in with a bunch of vehicles that are uninsured, or the holes in your own collateral that you might not be aware of. So again, what do we see? What are the implications of this? Higher premiums. The financial burden is being shared with a smaller group of people, the people that are insured. So that cost is going to go up. And if we can move to the next slide real quick. And again, what does this mean? So part of this, one of the other difficulties of understanding your risk on your portfolio is not just the people that are uninsured. It's understanding whether people have insurance or not. And gone are the days when people stayed with State Farm for 30 or 40 years. Like my parents did. I think they had State Farm every day of their life since they bought a house. But that's not the case anymore, especially with younger borrowers. They are more willing to shop their insurance. They are more willing to use the technology resources at their disposal, i.e., the internet, aggressive marketing campaigns, et cetera, that pull them in the direction of an insurance carrier. And again, it's difficult, when you're trying to maintain visibility into who has insurance and who does not, when they're changing insurance every 6 months, every 12 months, or even every 3 months, sometimes even every month. How do you keep track of that? How do you know what potential holes there are from a risk management perspective in your portfolio if you don't know who's insured or who is not? So it is a very it's a difficult environment, but then made worse by the fact that you can no longer assume that just because somebody had Progressive last year that they're going to have Progressive this year. They might be with Geico, State Farm, Liberty Mutual, Allstate. And again, how do you know whether or not that policy with Progressive is still in force, or whether it's with an entirely different carrier? So just another pothole out there on the road of insurance and risk management.
Those are all really good points, Scott. And it creates, like you said, shopping insurance does create some noise in tracking insurance and understanding who's insured and who isn't. Understanding who's insured is important for a lot of reasons. If I know different lender types and different lenders manage the risk in their portfolios differently. Some of them use collateral protection insurance, some don't. But no matter what, knowing who's insured and who isn't is imperative. as you pointed out, as more policies or as more lenders go delinquent, dropping your insurance is a precursor to that. So seeing a sudden rise in your uninsured rate is a predictor of a sudden rise in your delinquency rate. Knowing who's insured and who isn't also has ramifications on your repossession program, right? A lot of lenders will file claims on damage for those repossessed vehicles, and you can't file those claims if you don't know who's insured and who isn't, and when they were insured. So there's a lot of reasons why it's important to know. For those who do use CPI, right? False placement. We'll get into a little bit. I'll talk a little bit about experience here in a little bit, but false placement is a horrible experience for a borrower. It feels a little bit like, hey, I did the thing I was supposed to do, and you did this punitive thing to me anyway. But it happens, and we'll talk a little bit here in a second about why those sorts of things happen. It's the nature of legacy insurance tracking. But I think some trackers, I know Allied, are working on improving that. So let's talk a little bit about how those things are improving. Legacy tracking is inherently passive. And what I mean by that is, you've got a portfolio of loans, and you keep it clean you clean it up as they go into that tracking. So when they're new loans or when it's a brand new portfolio, you go through and you try to figure out who's got insurance and who doesn't. And then after that, you're dependent. Once you have a percentage of those that you assume has insurance, and you have either placed or notified, or however you're going to manage the risk on that uninsured population, then you are now counting on the carrier to keep your portfolio up to date, right? Well, there you're counting on that borrower to tell the carrier that you're the lien holder on that. And as Scott mentioned earlier, more and more people are shopping more and more often. That's a lot of opportunities to lose that lien holder on that policy. Different lenders and different carriers have different levels of effectiveness at making sure those lien holders are listed. But yeah, every time a borrower switches insurance, there's a possibility they're going to fail to tell that new carrier about who their lien holder is, which means that the tracker, whether you're tracking yourself or you're employing the services of a tracker like Allied, they're not going to know in this passive tracking model. We're not going to know that person then later dropped that insurance for some reason. So we're not going to be able to engage them and help make sure that they keep that collateral insured. So so as we look at how trackers are improving this, or some of the, I'm sorry, as we look at some of the limitations of tracking, to overcome that passive nature, a lot of trackers have started using B2B portals, and often they'll use robotics to hit those portals and try to proactively, then rather than passively, go in and try to verify insurance different ways. Sometimes it's done in mass, sometimes it's done at certain events. But that policy or that process also has a lot of limitations. First of all, there's a limited number of carriers that have these portals, and those that do, most of them actually require quite a few bits of data, bits of information about that borrower or about that insured to search for a policy in there. Some of them do this for data protection reasons. Some of them do it because that portal may not have really been designed with tracking per se in mind. But there's a pretty limited number of these portals that allow what we would call a wildcard search, or allow us to go in and just search with a VIN or a VIN and a name. And that creates a lot of limitations to robotic automation through carrier B2B portals. We've come a long way with it. More and more carriers have exposed these portals, but there's limitations. So what Allied has done is we've actually graduated to what we call digital insurance verification. And while yes, this does include there's three legs to this stool. One of them is access to B2B portals through robotics. But we've added to that access to third-party data sets that actually allow us to search for insurance and validate a policy, verify a policy with very little information. In many cases, we can do it with a VIN and a name, which we always have. So if we're verifying a policy, we will always have the VIN and the name, which means we can search every single policy. These data sources often have almost all of the carriers, or certainly a vast majority of the carriers involved. So we can actually search for carriers that don't have B2B portals. And then we layer into that access to carrier APIs. This is a fairly new thing. There's a very small number of carriers that are exposing APIs to their policy systems. Many of them seem to be starting on the real estate side, but more and more of them are exposing their vehicle policies through these portals. It's more secure, it's faster, and I'll tell you, Allied is aggressively pursuing these integrations in an effort to improve our digital insurance verification process. So why go through all this? Well, I think we're going to see here in just a second. Experience is king. If you think about it, companies like Amazon and Chick-fil-A and In-N-Out Burger and Lexus, and I know these, particularly the fast food ones, it doesn't seem like it seems like they sell fast food, but these are companies that have really raised the bar for experience. If you think about it, you think about your experience at an In-N-Out Burger versus a McDonald's. In-N-Out Burger is relentless about ensuring that every bit of that experience is simple and pleasing to the buyer. I remember going through one time, and they're mostly on the West Coast. I live in the Midwest, so going to an In-N-Out Burger and being a little surprised at the drive-through when they asked me, are you going to eat that in your car? I'm like, well, why do you care? But I told them I was going to eat it in my car, and then I realized why. Because they packaged the entire meal entirely differently, so that it made it convenient for me to eat in the car. This is a company that is focused on experience, and I can tell you that the trackers that are going to that are leading the way, like Allied, we are also focused on borrower experience. We want to make sure that your borrowers have a positive experience with their loan. Now, it is still important to track their insurance, and that can be an inherently negative experience, right? You're going to engage the borrower at some point. Maybe it's when the loan is new. Maybe it's when you've got a notification that they've canceled their insurance, whether they canceled it to, as Scott mentioned, stop paying, or maybe they just canceled it because they went to another carrier. It is imperative that you're reaching out to the right borrowers, right? So that is a part of that experience. You don't want to interact with borrowers who have insurance. You'd much rather, part of that experience is making sure that they never know that you're there. They never know that you're watching. So if you can validate that insurance behind the scenes without engaging them, then that's going to improve their experience. Educating the borrowers, also really, really important. When that borrower onboards with you, if they onboarded through a direct loan relationship, then they probably know who you are and they know what you're about. But so many borrowers onboard through an indirect relationship, through a dealer, and they don't know you. They sat down in the F&I office and they got a loan that had the best interest rate. They didn't really care who it was until they have to start paying you. Then all of a sudden, it does matter who you are and what their experience is going to be. So that initial education of who you are and what their responsibilities are is super important. I know Allied has some tools to help with that. I'll talk about those here in just a second. Well, I'll talk about those here in the next group, right? So another important component of uh, of that borrower experience is meeting them where they are. So traditionally, uh, the the connection to the borrower has been through a letter, a paper letter. As many of us know, 90% of what I receive in my mailbox is junk. So, and I get frustrated by just, I'm a person, even at my age, I get frustrated by being interacted with through paper. It's something I have to throw away. It's something I've got to filter through all of the junk and the coupon books and whatever else to get to. And I have to walk across the street to do it, and I can only do it when I come home from work. Whereas if a company can engage me through text messaging or email, then I can engage that anytime. I can engage that on a break at work or in the middle of the night. Uh, so engaging them electronically is hugely important. One of the other things that we like to add to that is smart video, right? So a vast majority of people choose to be engaged by video rather than by text these days. And we can actually render a video specific to that borrower that explains who we are, who their borrower is, and which vehicle they've purchased, and some other bits of data that are specific to them, so that that video is extremely personalized to them. Again, this is all about improving their experience, making sure that this inherently negative process of verifying their insurance is as positive an experience as possible. So some other components, accuracy. Accuracy is absolutely key here. As we mentioned earlier, understanding who's insured and who's not insured in your portfolio is important for a lot of reasons. Even if you're just tracking for informative reasons, the accuracy of that portfolio is huge. So Allied has invested a lot in making sure that our tracking is as accurate as it can be. I mentioned the digital insurance verification. That's going to reduce for those clients that we have that use CPI, that's going to reduce their false placement rate substantially. But we continue to engage in carriers. EDI is while it's a legacy component of tracking, it's still a very big component of tracking. So we are continuing to engage and make sure that we can get every bit of electronic data we can. It makes our process more efficient. It makes our process less expensive, and it allows us to drive activity based on the data we get, and it makes our process more accurate. But we're actually investing heavily. We do a little more than 10% of our data still comes in through paper, for a lot of reasons. Maybe that we just don't have an EDI relationship with that carrier, or there are other reasons why we'll get paper. In those cases, we're upping our game with our intelligent document processing technology. It's going to make our ability to process that paper faster, more accurate, and it's going to give us something a lot more like our EDI relationship, where we can pick very specific pieces of data off those pieces of paper. So again, it is absolutely critical that the tracker you're working with, or if you're doing your own tracking, but if the tracker you're working with is as accurate as they can possibly be. So with that, I guess we'll open it up to questions.
Outstanding presentation, gentlemen. And if you have
Thanks,
questions for Scott Myers and Mike Batchelor of Allied Solutions, please use the chat function here on the Zoom platform. And gentlemen, as we give folks a chance to type in a question if they have any, would love to hear your perspectives on one point that y'all mentioned during your great presentation. Scott, we'll begin with you, and then Mike, your reaction as well. Just when you mentioned the inkling of consumers switching insurance carriers quarterly, even sometimes monthly. When you started to see that come through the data, just what was your initial reaction to seeing that, and as you're interacting with clients, what's been their reaction to that sort of development? Scott, we'll turn back to you, and
Sure.
then Mike, your thoughts too.
Okay. Yeah, no, I mean, and a lot of it is kind of what you've seen in this presentation. We saw it, and we started to better understand, again, the passive tracking game is probably an old game at this point. We need to be more engaged in a digitally or electronically with carriers and with the data in order to make sure that the information that we gather is as accurate as it possibly can be in this environment where things move much more quickly than they did 5 years ago or even 3 years ago. This is again, it's Brave New World territory where it is very difficult to stay on top of where people are at. To Mike's point, you want to meet the member, the consumer, where they're at. You want to engage them only when you need to. Otherwise, you're a nuisance or a pest trying to get this information. So having, step one is have as accurate of information as you possibly can so that you do not have to engage a member or a consumer at all, and just do everything behind the scenes so that you can kind of leave them out of the equation. But that is a very difficult thing to do. There are some very exciting technologies out there that Allied has become more and more involved and invested into with the digital insurance verification landscape that we've sort of created out there. But again, we will continue, and everybody on this call should continue to seek out ways to get that information in a way that, again, is very low touch for the consumer, but provides the value that you need long term to make sure that you understand the risk involved in the portfolio that you manage.
Thank you, Scott. And Mike, back to you. Just perhaps how much of a reaction was it from either yourself or clients of, are you serious? This is really happening type of scenario?
Yeah. So clients who are working with us, obviously, they are insistent that we have a solution to this, and chasing these policies. It does have a hit on insured rates. It does suggest an increase in what we call quick issue claims, which are situations where there's a physical damage claim, and we've got to rush in at the last minute and try to fund that policy. We believe that this digital insurance verification is going to help us find a lot of these situations where a borrower moved from one policy to another and then left that policy, right? We'll be able to see that through this digital insurance verification technology.
Closing moments here on our webinar featuring two experts from Allied Solutions, Scott Myers and Mike Batchelor, for our session titled Digital Innovation for Collateral Protection, Trust but Verify. And just a reminder that we are recording today's session, so please keep watch of your inbox for a link to that recording so you can review the great information and share it with your colleagues. And to round us out with our time together, gentlemen, Mike will continue with you, and then Scott will have the last word. Just whatever part of your presentation you'd like to revisit or reemphasize to help drive the point home of how complex this issue is, but yet how it can be rectified accordingly. Mike, we'll turn back to you, and then Scott to round us out.
Well, and I think the thing to take away from this is the game is changing. It is, as Scott mentioned, legacy tracking it's still important, it's still valuable, but there are other technologies out there that allow a tracker, or a client tracking or lender tracking their own portfolio, to be more accurate. Allied is first to market with this, and we're really excited to be rolling this out throughout the course of the rest of this year. And we're really excited on how we can help our lender clients improve their risk management in their portfolios.
And
And
Scott,
and
back to you. How can your final thoughts and how can clients, if they're not already working with Allied Solutions, how can they connect with y'all?
Again, yeah, my final thoughts are pretty much along the line of Mike. It's probably never been more important to understand, the risk the risk within your portfolio. Again, cars cost so much at this point, which means loans are bigger, deficiency balances are bigger. Everything's just supersized at this point. So again, having that really good understanding of the insurance covered situation within your entire loan portfolio it's peace of mind, first of all, but it's also actionable information when you find yourself in a repossession situation. I'm like a broken record, but there are things that you can do with that insurance information outside of just informative reasons, tracking reasons, risk management reasons, but and beyond just CPI, there are other uses for that information that prove to be very valuable, especially in today's climate. And again, if you guys want to get a hold of Allied, the easiest way, contact Mike or myself. Honestly, we can definitely get you in touch with whoever has more information than we do, which is surprisingly a large number of people. Just kidding. But obviously, the Allied Angle, subscribe to the Allied Insights newsletter, or just reach out to alliedsolutions.net. You can find us on Facebook. You can find us on Indeed, LinkedIn, pretty much everywhere you expect to find your favorite companies. But again, if you want just to shoot an email to Mike or myself, we will definitely help you out.
That's Scott Myers and Mike Batchelor of Allied Solutions. Gentlemen, thank you for taking us through an intriguing and an important part of the auto finance space and how the game is changing as each of you articulated. Thank you again, gentlemen.
Thank you, Nick. It
Thank
was
you.
great to talk to you today.
Absolutely. And on behalf of all of us at Cherokee Media Group and Subprime Auto Finance News, my name is Nick Zulovich, and we thank you for joining us, and we look forward to having you again next time.